Hello, good morning.
Log out on one of your devices.
All right. Just a moment, please. Is it better now? Hello? Hello?
Sorry, please, you might need to log out on one of your devices.
Okay, I should do a log out. Okay, just a second. I'm almost logging out now. Just a second. Is it better now?
Yes, it is.
Hello? Good morning, or should I say rather good afternoon, everyone. It's awesome to be here once again, and I want to just quickly welcome all of us to Q4, but this is the second edition of the Fintech mentorship program for JIIPCC Mentorship and Internship program. You are all very welcome. I want to assure all of us that we would have a very, very interesting time within the next 9 weeks. 9 weeks is a lot of time to actually become a fintech practitioner of some sort. So I'm encouraging you, for those of you that want to make out a practical profession from fintech, I think you are actually in the right place, and JIIPCC will do all it can to ensure that we bring you the best of mentors to engage with you throughout the life span of this program. So very quickly, there are a few things that we must know. I've already talked about the program. The JIIPCC Mentorship and Internship Program for FinTech is a quarterly mentorship program for students and young professionals across Africa. Mentees are afforded the opportunity to access valuable advice, training, network, mentorship, internship, discussion forums, updates from the industry, and of course, resource materials from experienced mentors. The program seeks to encourage continuous training, development, and evolution in Nigeria and Africa, and of course, within the fintech space. So one of the objectives of this program is to provide easy access, guidance, training, and resource materials for students and young professionals. We're also here, part of our objectives as well is also to facilitate the dialogue and networking among experienced and less experienced practitioners and stakeholders. So it's some sort of a measure those who have been in this space and those who want to get on the space, with that opportunity for us to interact and to equalize knowledge is what this program actually brings to the table. Then also in terms of facilitating further mentorship and internship, scholarship and job placements, you can actually reference JIIPCC Mentorship and Internship Program if you want to further your studies. Good to know that we have somebody who actually from the JIIPCC Mentorship and Internship Program presently in Harvard. We've written out several several those who require maybe you want us to talk about your stay in this program, we can do you that reference and all of that. So it's really a beautiful thing to have all of you here presently. Yeah, so very quickly, I'm sure that we've already seen some of the flyers, but just a quick announcement before we get deep down very quickly is that we'll be having a get together in December. That's in Lagos and as well in Abuja. Further information will be provided to you on that so that you can plan to attend. I think the date is actually 17 December in Lagos. Then also, if you require a one-on-one mentorship program, one-on-one mentorship facilitation with any of our mentors, please feel very free to reach out so that we can actually make that engagement for you. Then just so you know that the JIIPCC Mentorship and Internship program actually has several expressions from intellectual property, artificial intelligence and technology, the energy industry, fintech, health tech and law, and patent drafting. So just in case, if you have friends that want to be part of this program, do well to inform them and of course to invite them. I'm extremely sure that this program would be of immense benefit to as many people who participate and partake in it. So once again, you're very welcome. So very quickly, you all know that this is week one. We'll be going straight into the business of today. And I'm very sure also that we have the mentor's profile. So I would quickly read out the mentor's profile before we have the presentations. So we'll be having two mentors today. It ought to have been three mentors, but we'll be having two mentors today. So I'll take the first mentor's profile. That's Mr. Peter Cole. Mr. Peter Cole is a legal associate with Nigeria's premier corporate commercial law firm, Chris Ogubanjo Legal Practitioners. He provides cutting-edge legal expertise at the intersection between law, technology, intellectual property, and finance. His professional legal expertise centers on novel areas of law, including technology law, IP and startups, AI, and fintech advisory. He also provides strategic legal counsel to early-stage, emerging, and high-growth startups and venture founders and their funders, whether private equity or venture capital or angel investors. He is a member of select professional bodies, including the International Bar Association, that's the IBA, the International Technology Association, the Fintech Association of Nigeria, the Young International Chamber for Commercial Arbitration, and Startup Law Global Institutes. You can see we are very privileged to have him on today's program. Before pursuing a full-time career in legal practice and advisory, Peter Cole co-founded and led impact startups and social impact initiatives, winning awards for innovation and social enterprise. He's a fellow of the Savvy Fellowship, the 0 to 1 High Impact Fellowship, an ambassador with the World Literary Foundation, and an alumni of the Holt Prize Global Enterprise Challenge. You're very much welcome, Mr. Peter Cole. Her name is Oluwakemi Idowu. Very quickly, I'll read her profile. She's a qualified lawyer with a background in public policy and 5 years experience working across legal and consult or involved providing general legal advisory, company secretariat services, compliance and corporate governance services to clients operating in the energy and banking and finance sectors, including fintech as a sector. So today is going to be power-packed. I'm sure that we already have received your questions, and very quickly, I would want to call up on Group 1 to start and to make their presentation. So is Group 1 ready? Is Group 1 ready to go? Is Group 1 prepared to proceed with the presentation for today?
Good afternoon, sir. My name is Ife. I'm having a little bit of a network issue, so I'm trying to get it set. I don't know if another group can come up first.
Okay, do we have someone who is assisting you on group one so that you can share your screen and share the presentation so that we can be part of it? The person assisting you can he or she take up from you so that once you stabilize with the network, then we can have more fruitful contributions from you as well.
All right, sir.
So who is the backup for group one? Hello? Is there a backup for group one, or do we skip group one's presentation and take the second group's presentation?
Yes, please. I prefer that.
All right. So is group two ready for us? You know, sometimes the network.
Good afternoon, sir. Can you hear
Okay,
me?
group two is ready, right?
Yes, I am.
Okay, so you can share your screen and proceed with your presentation. You have about 10
Okay.
minutes to do the best that you can to just go through. You necessarily do not have to read slide by slide. One good thing about presentations basically is that since you prepared the presentation, the understanding is that you already have a grasp of what that presentation is talking about. So you can just give us more of explanations about some of the things that you've written within the presentation, not necessarily reading it 100% of the time. You can merge both reading and explanation as much as you can to deliver, you know, a very wonderful presentation. Thank you. You can proceed, group two. Thanks.
Okay. Yes, sir. Okay, I'll just share my screen in a minute. Please hold on.
Please, you can go ahead with the presentation while you're trying to share your screen.
Can everyone see my screen, please?
Yes.
Hello? Okay. Good afternoon, everybody. My name is Owoseni Oluwabukola, and I'll be presenting for Group 2. As you can see, our topic is Fintech policies, regulations, and government actions. Basically, Fintech, position for financial technology, is simply anything that helps to make for easy delivery of financial services. It covers a wide range, going from cryptocurrency, financial literacy, wealth, asset management, etc. And in the past decade, Nigeria has actually experienced a very high increase in fintech innovation and utilization. In fact, statistics show that Nigeria is currently the second largest fintech hub in Africa, second to South Africa. However, with every good thing that comes in, we know that sometimes bad things also creep into. So we've also noted a very high increase in cyber crimes and those negative things. So this has called for regulation of that industry. And as you can see, SEC had to say, well, the importance of regulating the industry is to ensure that investors or participants in the market are protected, and also to ensure quick development of the sector. Well, other objectives of the regulation is to provide for certainty. Nobody would like to put their money into things that are not so certain. We want to be sure that everything has security measures attached to it. So it's other objectives of the regulation is to provide for certainty. Nobody would like their money myself. And we want to be sure that everything has security measures attached to it. So it's sorry, I could hear myself a minute ago. Can everyone hear me clearly?
We can hear you.
Okay. So another objective of the regulation is to foster competition in the market. Because of the certainty or because of the security it provides, we're sure that there will be more investors interested in developing or investing in fintech space. And this will lead to the number of creative players and those that would obviously participate in the fintech industry. Talking about regulation, so for fintech in regulation, right now we do not currently have any fintech specific laws. That's any statute or act that has been passed that is, stipulated for fintech only. However, we have several regulations that have come in either from the financial space or technology space that apply to fintech. And two major regulators of the fintech industry in Nigeria are the CBN, Central Bank of Nigeria, which is obviously in charge of oversight functions for anything financial service in Nigeria. We also have the Securities and Exchange Commission, which is for asset management. There is the CAC, which has to do with the incorporation of bodies, companies and because fintech will obviously deal with companies. We have several statutes, but there are two statutes we mentioned in our PowerPoint, which are the Open Banking Framework of 2021 and then the CBN Framework for Regulatory Sandbox Operations of 2020. There are other ones, as you can see in the slide. Open Banking Framework 2021. Now, the Open Banking Framework simply refers to the process of banks and other financial institutions opening up data, and other resources to be accessed by financial institutions for use for, just for the development majorly and for the operation of the banking and financial institution sector in Nigeria. And you have the CBN framework for the regulatory sandbox operations. If you look at our paragraph 2, the regulatory sandbox is a formal process for firms to conduct live tests, new innovation processes, services, delivery channels, business models in a controlled environment. And according to the last paragraph, it says that the sandbox is open to financial companies and telecom companies whose proposed payment solutions involves technology, which are currently not covered under the present CBN regulations. Moving on, the Central Bank of Nigeria and Rise Vest Technologies and 5 others. So we're asked to give cases, and this was the major case we found. So the case is simply that following the circular that was released by the federal government in March 2021, that banned the operation of cryptocurrency in Nigeria, the CBN instructed some banks to freeze the accounts of about 5 firms for still operating cryptocurrency or still trading in cryptocurrency. However, the court held that a circular cannot create an offense. You can only be punished or found guilty of an existing law. So since there was no offense in law, pursuant to Section 12, the court held that their accounts should be unfrozen. This simply shows how important government actions are to the development of the fintech space. Since deregulation, basically cryptocurrency has been on hold in Nigeria, at least legally, has been on hold in Nigeria. And, cryptocurrency is actually one major part of fintech. It has it's really enjoying due to such regulation. So actions are communicated through enforcement of law, and based on the theory of regulations, we see how important it is, even to the governments, that fintech is developed in Nigeria. This shows that government actions are very important, and where the government does not help in giving innovative or constructive regulations, it can bring to the end or disaster of the fintech sector. In conclusion, we said earlier, there's still no specific or institutional framework for fintech companies. However, there's presently a bill before the president, which is the Nigeria Startup Bill, and it's like an initiative bill between Nigeria's tech companies and presidency in order to harness the potential of our digital economy through different regulations and to ensure that Nigeria's laws and regulations for fintech are clear, planned, and then they work for the entire country. Thank you very much.
Thank you so very much for your presentation. I don't know if Group 1 is ready to proceed with the presentation. Is Group 1 ready?
Yes, sir. Group 1 is ready.
You can proceed. Thank you very much.
Please, a minute, I want to share my screen.
All right, that's fine. Or maybe while you are sharing your screen, you can just be, giving us 1 or 2 prompts about what you'll be talking about and all that, so that we can fill up the gap. Yeah.
All right. Can't do the things at the same time. Sorry.
No problem. Just Take the few seconds you need. So while you are coming up to speed, one of the things that would also be happening today is for those of you who sent in questions, from the groups, you would have the opportunity to read your questions live on the program. Let us see your face while you are reading your questions so that we can know where the questions are actually emanating from. I think that's also to encourage as many people to ask questions and to see how that your questions are receiving all the attention that it requires or that it needs. Is group one ready?
Okay, yes. I don't know if you can see my screen currently.
Not at the moment.
Can someone else? Can a group member share their screen?
Okay, would you want group 3 to proceed while maybe you, all right then. So if group 3 is ready for the presentation, you can proceed. Group 3, are you ready?
Hello, good afternoon, sir.
Yeah, good afternoon.
Yes, I'm ready.
All right then, you can proceed. You can share your screen and proceed, yes. Thank you. So the floor is yours now.
All right. Please, can everyone see my screen? Hello? Hello?
I think your screen is about to share. I haven't seen it yet, but I think it's about coming up.
Okay. My name is Moyalu Brittany. I'm presenting for Group 3, and our research topic is Fintech policies, taxation and the burden of compliance. Has my screen come up yet?
I don't know if somebody else can confirm, but I haven't seen it yet. Okay, I can see it. Oh, it's up now.
Okay. I will start with a brief introduction of what fintech is. So it is the use of computer programs and technology to facilitate financial activity. Basically, it's merging the financial service or the financial industry and information technology. There are various rules and regulations that guide fintech industry, though they don't have their own single legislation. So there's the consumer protection, cyber security, data protection, and so on. Fintech offers different services, just like or more than a traditional bank would offer. They offer digital banking, investment, crowdfunding, electronic payments, and we have some fintech firms that exist, like the Mint YN, Kuda.
I think I've kind of lost your audio. Hello, are you there? Is Brittany there?
I think she was disconnected.
Oh, okay. That means she's it appears she's totally off. She's totally offline at the moment. Do we wait another 15 seconds to see if she's back up, or do we move straight to group 4?
Hello.
All right, Brittany, are you back?
Yes, I am.
All right, you can proceed then.
Okay, I was talking about, I've moved to taxation of fintech industry in Nigeria. So currently, we don't have a standalone or a single legislation that, or single policies that guide taxation in fintech industry. However, fintech companies are still considered as companies generally, and there are certain taxation that applies to these companies, such as the company income tax, value-added tax, personal income tax, and so on. Similar with tax incentives, there are we don't have special tax incentive for financial technology companies, but we have them under the company income tax, like section 30 of the company income tax provides that when a company earns below 25 million, they they don't pay their company income tax. However, if a company earns between 25 million to 100 million, they pay their company income tax. Similarly, the financial technology companies are also expected to pay VAT, that their consumers, whatever services or products that they give to their consumers, they are supposed to remit value added tax. So then we have the case of Vodacom versus FIRS. Now, this case relates more to a non-resident company. That's a company that is not that the geographical location is not in Nigeria. So in this case, Vodacom was the consumer and they purchased certain products and services from NSS. That NSS is a foreign company, that's a non-resident company. And when their contract was done, the FIRS requested for their VAT. And Vodacom argued that they were not supposed to pay VAT, considering that they were the consumers and they did not have the duty to report or remit that. However, FIRS stated that under Section 10 of the VAT, that non-resident companies have to pay have the whatever services or importations that a consumer consumes in Nigeria, the person is supposed to remit the tax. And as such, Vodacom had the duty to pay their value added tax. While there are no tax particular tax incentives, there are certain tax incentives under the Finance Act. Like you have the pioneer status, where a companies considered as operating in a pioneer industry are entitled to apply for pioneer status. If granted, they enjoy certain corporate tax relief or holidays. Then there's also due to the impact of COVID, the minimum rate of the minimum tax rate has been reduced from 0.5 to 0.25. Then there's Section 26 of the Finance Act provides that companies engaged in research activities enjoy 20% investment tax credit. So I believe these special tax incentives could apply to a financial technology company, considering that generally they are still considered as companies in Nigeria. Then while the Nigerian government still tries to get tax from these financial technology industries, and even those companies that don't they are not geographically located here, they still try to tax them. And one of it started 2019 under the 2019 Finance Act, there was the significant economic presence. There was a significant economic presence order, which stated that a company will be deemed to have significant economic presence in the country where they have over 25 million annual gross turnover. And as such, they will have to remit and pay tax. However, the problem with this was that it was difficult to ascertain the particular income derived in Nigeria and also the tax deductible and in the tax deductible expenses. And in order to, according to the CIT, in order to determine the tax deductible expenses, it includes like the expenses and the necessary and essential expenses that a company carries out in order to achieve their taxable income. So if the taxable income and the tax deductible expenses are difficult to earn, the profit that will go to the tax authority will always be an issue of controversy. So there has been changes that have been made to this law, like under Section 89A of the Finance Act 2020, the FIRS was charged with the responsibility of taxing digital businesses. More recently, under the Finance Act 2021, Section 4 and Section 30, sorry, sorry. Yes, Section 4 and Section 30 of the Finance Act, the Federal Inland Revenue Service may assess company tax on the income of non-residents. Also, this year, in 2022, I think February 2022, an announcement was made by the Ministry of Finance that non-resident companies would be responsible to remit or to pay tax of 6%. So companies like Netflix and Meta, they have to pay a tax percentage of 6% to Nigeria because they have consumers here. Um, while while this and the Minister of Finance stated that this was a fair tax percentage. However, when we compare that to digital tax imposed by other companies like Canada, France, and UK, they have a digital tax percentage of 3%. Um, Kenya has 1.5, and India has an imposed digital tax service for 2%. Yeah. So when we place this, Nigeria's tax percent for these non-resident companies are quite high, and because this might particularly discourage foreign investment and would even discourage these non-resident companies from conducting business here. Okay. There are certain taxation and burdens of compliance in the fintech industry. One of which is that there is no codified law governing fintech in Nigeria. Rather, we have different agencies with their regulations that address specific issues at the time. So, in order to deal with this issue, I believe that there should be a single law or a single taxation policy specifically for the fintech industry so as to avoid certain uncertainties in the industry. There's also the lack of effective electronic system for filing and paying taxes, which statistically, when there are electronic means to pay these taxes, the time for compliance reduces by 30%. So this by having digital ways to pay the taxes, the companies and the fintech industries would be able to comply more and pay their taxes. Then also lack of fintech specific tax incentives could also pose as a burden because this is a new industry that brings a lot of income and the growth has been enormous in the country. So I believe when there are specific tax incentives for this industry, it would promote growth in the industry. Also, fintech companies, they don't currently have the capacity to determine the services and the products that they offer, those that are vatable and not vatable. Here also, the having one single legislation would also help to solve this issue. So, thank you.
All right. Thank you so much, Brittany. I was almost about to tell you that you have like some 10 seconds more. Very, very nice presentation. I'm hoping that we are taking note of some of the areas you've mentioned, especially in this presentation, where you have set things around single taxation policy and maybe a single regulator for fintech, and all that. So I'm hoping that we will dwell more on some of the issues you've raised during the Q&A session. I'm sure that Group 4 or Group 1? Who goes first? Is Group 1 ready?
Yes, sir. Group 1 is ready.
Is your backup also ready? The person backing you up in case you have technical issues again?
Yes, she's available.
All right, you can proceed now then. You have 8 minutes. The time is 12:32. So I'm hoping that by 12:41 at the most, or 42, you must have rounded up with the presentation. Thank you. You can proceed.
All right, good afternoon, everybody. While we wait for my backup screen sharer to share her screen, my name is Ifeoluwa Junodu, and I'm taking us on a discussion on legal development in financial technology. Have you ever had to stand on a long queue at the bank just to receive customer care service, and then when it gets to your turn, it's just a one-sentence response, or your problem isn't even solved? It's quite daunting and it's quite stressful for customers to do that. However, with the advancement in technology, we now have customer care services that are automated. So now you can just go on your mobile phone and you have frequently asked questions. You have bank apps where you can ask questions, make inquiries without having to leave the comfort of your home or the comfort of your work and having to go to the bank. So this, amidst many, is one of the benefits of the union between finance and technology. Basically, financial technology is the use of technology to improve financial services. The evolution of financial technology can be traced back to the early times in 1950s, where we had early credit cards, and it was the first fintech product available to the public. However, fintech was not yet pronounced until the global financial crisis in 2008, which led to more development and exposure of fintech. Now we have various categories of fintech, ranging from crowdfunding platforms, cryptocurrency and blockchain, which is very popular, online and payment and mobile payment systems, gateway systems, and insurtech for insurance companies. Fintech is so important. It is cost effective, there is security, it is convenient, and it is fast. The same way law cuts across various sectors of life and various sectors of the economy, there is a beautiful relationship between fintech and the law. If the law doesn't regulate fintech, it will lead to a lot of imbalance in the financial service, and there won't be protection of customers and the service providers. We have reasons for legal development in fintech. As technology advances, it is trite that the law also advances to quell certain risks and challenges that arises from financial technology, such as fraud, data theft, and so on. Different countries have responded to financial technology in various ways. For instance, El Salvador became the first country in the world to legalize cryptocurrency as a form of payment. Central African Republic also has adopted Bitcoin as a legal tender. However, in Nigeria, cryptocurrency is illegal due to a ban on it by the Central Bank of Nigeria, which is the Apex Bank. The CBN had to freeze the bank accounts of several fintech companies, and in their words, they are investigating illegal transfer or illegal foreign exchange transaction. So this shows that various countries have various ways that they have responded to fintech taking over the financial industry. In the United States of America, however, fintech is very well regulated, both at the state and the federal level. We have the BNPL, which is very, very interesting, the buy now, pay later fintech companies. So these are basically money lenders which allow their customers to lend money without having to produce any form of collateral or have to go through any serious process. They can just go on the app and they are able to lend money from the fintech companies. Before now, there was no regulation on the BNPL fintech companies. However, in 2020, the California Department of Financial Protection and Innovation made a regulation requiring the BNPL companies to obtain license. Now, why is this important? It's important because where there are no guardrails to the operations of these BNPL companies, it will lead to exactly what happened during the global financial crisis. They won't be able to regulate how to handle a default in terms of customers not being able to refund the money or pay the loans, and most of the time they resort to very unhealthy means of obtaining their money back. Then we also have state money transmission laws, where in the United States of America, for you to transmit money within states, you have to abide by the regulations of those states. Then we also have fintech charters, which are also provided. They are basically licenses given to fintech companies to be able to go on with their businesses. In the Federal Republic of Nigeria, on the other hand, we don't have a specific legislation regulating fintech. However, we have CBN guidelines. We have CBN guidelines on direct debit scheme in Nigeria, bill payments, mobile money services, and various other laws and regulations. Basically, the CBN guidelines require the fintech companies to obtain licenses before they can operate, basically. Fintech raises a number of legal and regulatory framework questions and challenges, for example, cybercrime and attack, money laundering, and especially data privacy and protection. One very interesting case is the Soko loan case. I don't know how many of us are familiar with the Soko loan app. It is also a money lending app for its customers, and some of them laid complaints to the NITDA, which is the National Information and Technology Development Agency, stating that the Soko loan fintech company was basically sending out funny messages, defamatory messages to contacts on their list just because they were unable to make a repayment of the loan. So the NITDA had to fine Soko loan to a fine of 10 million naira for a breach of their data privacy. So we see that fintech has brought a lot of issues have arisen as a result of financial technology, and because of that, the law had to also evolve in order to curb all these issues. So we have this Nigerian Cybercrimes Prohibition Prevention Act 2015. We have the USA Anti-Money Laundering Act of 2020. We have Nigerian Money Laundering Prohibition Act 2011. And various data protection laws also in Nigeria to ensure that customers are highly protected. In conclusion, as technology advances, as there are many advancements in how we do finance and commercial activities, the law also has to advance in order to ensure that there is a free flow of financial activities and both the providers of the financial services and the customers are properly protected. Thank you very much.
Thank you very much. Thank you very much for your presentation. I took a lot of notes as well, and I'm hoping that we would get the time to get the feedback from the mentors on the presentation. So I guess we have group 4 left now. Is group 4 ready to proceed with the presentation?
Yes, I'm ready.
Group 4, are you ready? All right, you can proceed then. The floor is yours. Thank you.
Okay. So let me share my screen. Can we all see the screen?
Yes. Yeah, so you have. Yeah, it's loading up. You have about 10 minutes. So by 12:51, 12:52. Yeah, we can see your screen.
Okay. Good morning. Good afternoon, everyone. My name is Ephraim Abugon, and I'm presenting for Group 4. So our project. Sorry, please give me a second. Okay. So we are focusing on acquiring talent in the fintech sector. Basically has to do with employees that are necessary in the fintech sector. Sorry. So the contents, like you can see, but because most of the other groups have defined fintech, what it entails, I believe there's no need to do that again. So I'm going to go straight to the topic. Talent acquisition. It entails the process of finding, evaluating, and hiring skilled individuals a company needs to meet its organizational objectives. Sorry, please, can we hear me?
Yes, we can.
Okay.
Yes.
Thank you. So this majorly, just simply put, just means employees, skilled individuals that are necessary in the fintech economy, in the fintech organization rather, sorry. And actually the employees needed, the talents needed in the fintech organization is actually inexhaustible. Like every other sector, they need, there's an hierarchy of order from the CEO down to someone as low as the messenger, pardon my use of the word. And I'm going to start with the operations manager. The function of the operation manager simply is, as the name implies, is to oversee operational activities at every level. That's hiring, training employees, managing quality assurance programs and the likes. Software engineers, also known as application developers, also known as software engineers, software developers. Their major function is to create applications, to develop software that will enable, that will assist, that will enable easy flow between the customer and the easy flow between the customer and the organization. That's a fintech organization. We move on to the UI UX designers. The UI UX designers, they create user interface. These people are responsible for creating user interface between the app, the website, or any other interactive media for the fintech organization. And of course, they cannot make use of financial applications. We have the example of PayPal, we have Paga, we have InterSwitch. And they work together with software engineers, they work together with the product managers and the customer experience experts. We also have, to the next one. We have the compliance officers. The compliance officers, they ensure that the company functions in a legal and ethical manner while meeting the business goals of the organization. They make sure that things are done orderly. You cannot expect one of the employees, probably the UI UX designers, to just release anything without proper authorization. And they develop compliance programs, they review company policies, and also they advise the management on possible risk, whatever they might want to do in the industry. They do a breakdown of the risks and the benefits. Then also, like I said earlier, application developers, they're similar to the software designers. They develop apps. That's basically what they do. Then customer experience experts. The customer experience experts, what they do is they are like, the example we use is the help desk, popularly known as help desk. They are the bridge between the people and the company. That's between the consumers, between the I'm lost. Yes, they're the bridge, basically. They're the ones that bridge the gap. There's anytime you have issues, they're the ones you approach, they're the ones that they have knowledge of how to relate to people, they have knowledge of how to solve issues, how to calm people down. A very good example, as stated by Group 1, I think, when you have issues with your banking transactions, you don't necessarily have to go to the bank all the time. These people are here, they are ready to assist you, to put you through even issues that sometimes might be, that might not necessitate you going to the organization. Then we have cybersecurity experts. They protect sensitive data and both the company and the personal data. Cybersecurity experts are actually needed in almost all fields. Anything that has to do with technology, they prevent illicit access, they prevent hackers, they prevent digital attacks on sensitive data. And due to the high rate of hacking and everything, these guys are actually very needed. And we are dealing with financial issues here. We are dealing with money, and they have to make sure they have to be at alert every single moment to make sure that sensitive data is not sold out to the public. Then data analysts, we have we have the product managers. Product managers, as the name implies, they're responsible for planning and overseeing projects within an organization, especially in fintech, both from the beginning of the idea to the completion. They coordinate workers and processes, they develop projects, and also they are always conscious of budgets. That's one of their major, always conscious of budgets, the budgets of the company. They make sure whatever they do must align with the budget of the company. And the legal considerations that a company must take before acquiring talent. First off, there must be intellectual property issues. There's always, because of the IRA, because it might be necessary to invent things, to bring up new applications and everything. It is quite necessary for the ownership of the patent, whatever app is being developed. It's always necessary an arrangement, of who has the rights to the intellectual property and who is going to be the share of the funding, the share of whatever profits might come from it. And another important aspect is, after the termination of employment, whether the employee is going to continue having the rights over such application, or if this termination of employment also leads to termination of of patent rights and avoidance of discrimination. Fintech companies cannot employ based on they cannot discriminate when employing. Although unfortunately, there is according to statistics, only 37% of fintech employees are women, and even as low as 90% hold C-suite positions, which should not necessarily be, but freedom of rights as guaranteed by Section 42 of the Nigerian Constitution should also be put to note. Then immigration and laws permits, because the fintech industry does not necessarily need fintech industry can work like fintech workers can work remotely. They can work from their own, so they just need a laptop and internet connection most times. There might be necessary. They might also need to obey some immigration rules and get permits, as the case may be, looking at Section 38 of the Nigerian Immigration Act. And also, sorry, please. Background checks. You cannot expect most times to be detrimental to the organizations that are probably known for things like hacking, because that would be that will actually work against the integrity of the company. Then I think that's basically all. Oh, thank you. That will be all for now. Thank you.
Okay, thank you very much. I think we lost our moderator, which is Mr. Joseph. So that's all from the presenters. Thank you very much, Ephraim, for that beautiful and very educative presentation. So we'll call on our mentors now to give us their contributions and their comments. And our first mentor is Mr. Peter Cole. Please, Mr. Peter Cole, are you with us? Can you hear me?
Yes, I can hear you. Yeah, very well.
Yeah, please.
Can you hear me as well?
You can come in now with your contributions and comments.
Yeah, all right. Yeah, so I want to start by giving a thumbs up to every presenter for each of the groups. They all did fantastically well in the presentations. The slides were well articulated as far as we could see from here, and the points were well made. Now, fintech has advanced over the years in Nigeria and Africa and globally. We've had even traced from the financial crisis of 2008, which was a very, very huge milestone that resulted into fintech as we know it. And then prior before that, other estimates going all the way back to 1860, when the very first known fintech in its formal sense first came up. But I think that the most important thing that each of the speakers touched is not only how fintech has evolved, but how it is being applied as we see it right now. And the takeaway for me is just that every person who's presented today, everyone who was a part of the group was part of something that was very knowledgeable. And not only was it knowledge-driven, it's a key point regarding how fintech operates. Now, my colleague who is also here, who is a fintech practitioner, will understand that these days, fintech are taking the forefront when it comes to financial technology in Nigeria. The issue of finance, corporate finance generally, fintechs are at the forefront. Previously, the traditional capital markets players used to be the regular funders and the regular big outfits and companies. The fintechs company and outfits as we have them now were previously not recognized. But thanks to the advancement in technology, we now have the unbanked population being brought in, and more people have been reached. Now, for statistically speaking, before the CBN cashless policy of 2014-2013 was introduced, the banking population the banked population in Nigeria was somewhere around, I think, between 40 to 60 million. But over time, due to that advancement in financial technology, we now have around 150 million or more people now currently being covered by digital banking technology. This shows you the benefits and the advancement that fintech offers to the economy. We could go on and on about all the benefits, but the speakers and the presenters have already highlighted a lot of them. And I want to once again congratulate them for a job well done and wish them the best in their future endeavors. Thank you very much.
Thank you very much, sir. That was a very nice one. Okay, we'll call the next mentor to give her contribution and comments. Miss Oluwakemi Idowu.
Hi. So like Peter said, I think everyone did a really good job. I think like a lot of research and work was put into the presentations. I think one thing I really liked was that each presentation used practical examples, because the thing about fintech is like, okay, so everybody's just figuring things out. No one has all the answers because it's constantly evolving. And what you find in like, I mean, not just in Nigeria, but around the world, is that regulators are trying to keep up with technology, which isn't possible. So you have a case where like practitioners are trying to explain or at least get the regulators to understand their innovations or how they impact the economy and stuff. So I think one, I guess, really positive, I really like the examples. And secondly, I think it's great when you bring comparisons to other jurisdictions, because everything is so interconnected now. Like with technology, what happens, as everyone knows with fintechs, is that you end up expanding to other countries. So you're not just, so now as a lawyer, like obviously I went to Nigerian law school, studied Nigerian law, but the truth is once you become a fintech and you have like a parent company structure, there's so much more to it you have to figure out. So it's not just about Nigerian law, it's also about, okay, looking at Kenyan law, looking at South African law, looking at the US law. So I think everyone did a really, really good job. I thoroughly enjoyed the presentations. And I think that's it from me. That's my, thank you.
Thank you very much, Ms. Kemi, for that contribution. And Mr. Cole, once again, thank you very much. So we'll move to the next thing, which is the picture time. So we call all our mentees to put up their video. All the group members, put up your video and take a screenshot of our session today. The screenshots should be posted on your group, on your social media platforms, tagging your friends and telling them what you learned today. Thank you very much. Thank you very much. For those that haven't put up their video yet, please kindly do that so that we can move on. Okay. Thank you very much. Okay, that's it. So you can take screenshots of our faces. And post on your social media platforms. Okay, I'm also taking the screenshots myself. Thank you very much, everyone.
Okay, thank you, everyone. So if we have done that, I think that it will be time for us to take questions. So if you have a question, please just lift your hand up. You can just indicate and then we'll call you to ask your questions. We understand that some of you already submitted questions, so those questions will be asked also, but we want to give you the privilege to ask your questions live first, and then after that, we will take the other questions that were sent earlier. So please, if you have a question, you can raise your hand up and we'll call you to ask your question. Anyone with a question, please just lift your hand up and you'll be called. Okay, so I can see Oluwatobilola. Please, you can unmute yourself and ask your question. Thank you.
Good afternoon, ma'am. So while I was researching for my group, because we were asked to talk about the burden of compliance regarding payment of taxes by fintech companies, I discovered that company income tax is not paid by petroleum companies. Why is that, ma'am?
Okay, thank you very much. So any of the mentors can go ahead to answer the question. Thank you.
So Toby, Peter can also chime in, but I'll just speak to because I now do fintech. I used to do energy, but not as much. But I think the reason why is because the petroleum industry has its own specific tax regime. So since it's already provided for under that like bill or act or legislation, essentially, if they were also taxed on a company's income tax, it would be double taxation. But that's my own understanding. I don't know if Peter has anything to chime in that regard. Okay, I guess.
Yeah. Oh, sorry, I didn't quite get the question. I don't know if it could be repeated, please.
All right, so I said, why don't petroleum companies pay company income tax?
All right. Okay. So that's a very interesting question. Now, I have sort of represented companies that work in the petroleum industry, and I'm aware that typically there's some exemptions that operate in that sector, especially the downstream and then the upstream sector of the petroleum industry. Now, not long ago, the federal government decided to have certain policies in place to encourage people who do business in that very precarious sector. Now, you have to understand that first and foremost, the petroleum industry is by all means the backbone of the Nigerian economy. Now, what that means is that a lot of what Nigeria does in terms of budget financing and revenue comes from petroleum. So it's a sector that will get that kind of attention. So there were a number of incentives previously just to encourage players in that industry to be able to operate in a system that is free of the hazards of taxation and revenue cut. Now, like you pointed out, the picture of that is that a lot of revenue hasn't coming that was supposed to come in. But on the other side, too, on the flip side, the proponents of that policy can tell you that that has enabled Nigeria to benefit the most from tapping the potentials of that industry. Maybe not in terms of the fiscal policy, revenue-wise, but just to downplay your fears a bit, I'm aware that recently, because since the privatization of the NMPC and the new structure we have in place, the new Petroleum Industry Act that was just passed actually has some clear fiscal requirements that is placed on petroleum industries, players in that industry. So it's not as if they don't pay any regulation, they don't pay any tax at all, but they are exempt from certain categories of tax. Now, speaking specifically to the company income tax, I'm not aware of any provision in there that specifically excludes them. I know that by implication of government policy, certain players in the industry have benefited from that. I hope that answers the question.
Yeah, thank you very much.
Thank you very much for that response, Peter. We're very great. So we'll be calling Brittany. to also ask her question. Please, you can unmute yourself and ask, Brittany.
Yeah. Good afternoon. Please, I just wanted to know if there are specific ways that other jurisdictions determine VAT that their consumers pay, because in Nigeria, I think that is still kind of a difficult area, especially with the case of Vodacom versus FIRS. So I just wanted to know if there's a way that they determine the VAT in other jurisdictions.
Okay, so any of the mentors can take a go at it also. And then also, thank you.
These questions are quite challenging. Love it. So how other jurisdictions tackle their tax, my answer to this would be, from my experience, they're obviously different, different figures that different jurisdictions charge. So they have the relevant tax regime, and then under that tax regime, they have the percentage of tax that they collect. So I can't speak specifically to each jurisdiction and tell you that in Kenya, this is how they go about it, or this is what the regulator says. But I know that I've worked with Kenyan businesses, and I know that when I saw the tax, it was I think it was 15% or something, and I thought it was absolutely ridiculous, because Nigeria, we increased this, and I thought 7.5 was a lot, but I think it just varies in accordance with their fiscal policy, and other factors will probably come into play in the regulator deciding how to tax companies. Yeah.
Thank you.
Thank you very much, Kemi, for that response. So we would also like to hear from Peter Cole.
Yeah, thank you very much. Yeah, I think Kemi's very brilliantly addressed that question. Now, when it comes to fiscal policy, it's usually jurisdiction specific, right? What that means is that each country determines and decides how their fiscal policy works. The implication of that is that Nigeria has certain tax laws that are not applicable in other jurisdictions. But in terms of fintech specifically, speaking specifically to fintech, it is clear that there is a depth and there is a gap, a void in terms of fiscal legislation in Nigeria. Because of that, we now have issues of fintech companies generally being facing imposition of taxation that they should ordinarily not be paying. Kemi spoken about the very high rate of, I think, value-added tax or income tax in jurisdictions like Kenya. But in Nigeria, it's a bit higher than that. Maybe not marginally, but overall, you have to pay for licenses from state government and federal government. You have to, although directly, fintech companies are supposed to be regulated by the CBN, and that's the primary regulator of all they do. But more often than not, you have demands for revenue, for tax from them, from both state and federal governments, which is more or less an overlapping of a double taxation policy. So that's why certain players and certain commentators on the fintech industry have asked that there should be a very, very clear pathway in terms of what tax laws are applicable to fintech companies and which ones are not. So if we're serious about taking advantage of this very, very potentially great sector, then we have to also ensure that the revenue laws that we have in place benefit them. They are not draconian and they're not oppressive for startups. Because more often, the reality is that the biggest players in the fintech industries are not the capital market operators or people who can raise money from the large reserve of cash we have on the capital market. They are players who start very small, more often than not. They bootstrap a number of them, and then they get access to Series A, Series B, and the high-level funding. But before this funding comes in, we have to ensure that these startups survive first. And they will not survive if tax laws choke them, and they have to pay out of their mouth for what they do not have when they are not even generating revenue yet. So that's a very good point, very good question. Thank you.
Thank you very much, Peter Cole, for that response. Thank you also, Kemi. So I can see that Joel has his hand up. So please, you can unmute and ask your question, Joel. If you have a question, please just lift your hands up and you'll be called. Thank you.
All right, thank you. Good afternoon, everyone. Thank you, our mentors. I have a number of questions. The first two are relating to talent acquisition. So I wanted to know how fintech companies, because our mentors are in the field, they know how things operate. So I wanted to know how fintech companies survive in this JIIPCC era. Most talents are moving abroad. How do they cope with retaining talents in Nigeria? And that brings me to my second question. Which is better for a fintech company? Is it to look to the gig economy, that is, are they to employ talents who just do gigs, or they should seek long-term employment, which is more profitable to them? So those are the first two questions with regards to talent acquisition. I still have other questions, but I don't know if our mentor should first answer these questions before I move on with my other questions.
Yes, please. Yes.
Or should I just move on with my other questions?
No, I think that we should get the answers first to these two. Okay. Thank you.
Okay.
We'd like to hear from you, Kemi, and then we'll also hear from Mr. Peter.
Okay. Thanks, Joel, for the question. That's actually a really good question yet again. So I think talent acquisition has become really difficult because of remote working. So like the reality is that a lot of Nigerians can work, software engineers, product managers can work in Nigeria and then get FX from foreign jobs. So I think, well, I'll speak to my own experience, but I know that in terms of the company that I work for, how they try and retain talent is that the HR is very, very much on it. So like there are lots of perks, benefits, and they're always checking. So basically you have to have the head of HR has to be still like the head of HR has to know what they're doing. You know how sometimes like people hire HR officers that are not really HR specialists, like you have to be a people expert. And I think also allowing flexibility. So many times you have people with two jobs. So the long and short is, if you do your work, you can have other jobs if you want, but like, because if you work remotely, the truth is, your employer doesn't know what you're doing. You could be in France, you could be in England. Like I, for example, worked from a different country for like 6 months. So I feel like flexibility. So remote working has allowed, employees to understand that, okay, you work for this company, but you can also like have other things to supplement your income and stuff. And I think employers understanding that the world is changing and moving with it is also a step to go. And I think another thing I would think is interesting is that a lot of fintechs are now hiring foreigners. So I think like with the funding that fintechs get, they have like more money to hire more talent and also pay more. So I think in answer to your question, it all boils down to money and just ensuring that you have like good working conditions, because a lot of people don't have patience anymore. If you're not providing good working conditions, they're going to leave. I hope I've answered your question. I think that was the first question you asked. The second one you asked was about, so if you could remind me the second question.
Whether they should recruit based on gigs or long-term employment.
I think that's really just a business decision. It depends on what the company wants. What is your strategy? Are you intending on building like a vision with a group of people, or do you want to have gigs? Do you not want a community? Like, it's really not a one size fits all, in my opinion. It's just like you have a company, you look at your business, you look at the future, and you decide, okay, this is what works. Sometimes you may have a certain structure. You could even change it halfway. There's no rule to it. You could start doing gigs and then find out it's not working for one reason or the other, and then decide, okay, actually I'm looking to hire more long-term. So I would say don't ever put yourself in a box. Just like look at the context and then apply reasoning to that specific context. So that's what I would say to that question. Yeah.
Thank you, Kemi, for that answer. So we'll also hear from Peter Cole.
All right, yeah, thank you very much, Kemi, for the very brilliant answer. I also touched on a lot of things I was going to mention myself, but just specifically speaking, we have to understand that the issue of talent retention and brain drain, as we call it, is a contemporary issue, and it's a contemporary issue that actually requires a contemporary solution. Now, the truth of the matter is that right now, a lot of talents are moving. And the question is always, why are talents moving? Why are talents not staying behind to take up these opportunities here? And oftentimes it's always a question of compensation, remuneration, and welfare packages. So if the idea is to retain them, then you have to be able to address these issues. We have to pay attention to putting together a welfare package that's attractive, a welfare package that pays attention to the needs of the employee. Nobody wants to work in a toxic environment. That's what people have to understand. Now, there's a corporate work culture.
So good.
Hello, can you hear me?
Yes, we can.
Sorry, I think so I was saying that there's a corporate work culture around toxicity in many sectors of the economy, not just in Nigeria. I think if I can point fingers, look, I would not want to do that. But there's some sectors that are already renowned for their toxicity, right? You can name them. People know that these areas, if you work there, they thrive on promoting toxicity in the workplace. And that's why recently it seems as if a lot of talents are leaving because people don't want to work in places where they cannot see that they're valued and they are being treated with disdain. Now, to address this, we have to make the workplace stress-free. Now, stress is part of work, right? But not stress that kills, not stress that takes you from doing the work itself, and not toxicity from seniors and people who are ahead of you. And that's what Kemi touched on when she was referring to the need to ensure that maybe a flexible work culture. Now, for me, I think that a lot of the talents we speak about right now in the tech industry are majorly a couple of millennials and a lot of Gen Zs, right? So understanding that this is the category of people who play here, you have to also ensure that in terms of addressing their psychological needs as well as financial needs, the attention is paid to that as a whole. Gone are the days when the only thing companies could offer employees is security of job. Now, employees want more than that. They know their value and they will go where that value will be met. So that's just the thing. That's the most important thing to note about talent retention. And Kemi's also mentioned that finances are very important regarding that. There's no way you'll be able to attract the best talent if you're not offering the best welfare package. Relatively, it's not a question of how much you're paying, right? But the overall welfare situation and package that you're able to put together for the prospective employees, people go where they're valued. And where value is offered, talent will be attracted. That's my point on that. Thank you very much.
Okay, thank you very much.
Thank you very much, Mr. Peter, for that response. Thank you also, Kemi. So I don't know if any other person has a question before we call Joel back, but there is a question that was submitted before. So I would just like to ask that question while we check if another person has a question. So the question is, in what way did the cashless policy introduced by the Central Bank of Nigeria influence the growth of fintech? In what way did the cashless policy introduced by the Central Bank of Nigeria influence the growth of fintech? So this question will be going first to Kemi, and then Mr. Peter would also answer it.
Okay, thank you, Juliana. Thanks for whoever asked the question. So I would say, okay, I'm going to break it down. So let's look at it from a policy level. So if at the central bank level, the government is saying that they want to reduce the amounts of cash circulating or being used in the economy for certain transactions, that will mean that there will be a gap that has to be filled. So with that cashless policy came, obviously, people coming up with solutions to find alternatives to paying in cash. So you see more people using debit cards, you see less people using cash for transactions, and then you see like fintechs providing solutions for the general public. So you see USSD, electronic transfers, companies like Flutterwave and Paystack. So I think like the government making that decision really like accelerated people finding solutions, because if there wasn't that push, I don't think the change would have come faster and adoption probably wouldn't have been as much, because we're looking at like the whole population, right? Like the different segments of the economy. So I think I think I can't remember the exact year Flutterwave, like, what's it called? Flutterwave came into existence. But I know that since then, today, if you ask me if I have cash, I never use cash. I always use USSD, transfer. So I think like this, we've even reached the level where it's like, if you ask most people, they don't even have cash anymore. So it's now like ridiculous. Well, I guess different segments of people, but like different segments of people. But I think, yes. So I think at the policy level, once you have that decision, it filters down to private people and then consumers, and people just continue to innovate as time goes along. I think, yeah, that's it from me.
Thank you very much, Kemi. Okay, so we'll be hearing also from Mr. Peter Cole.
All right, yeah, thank you. Yeah. As always, Kemi's touched on very vital issues surrounding the cashless policy. Now, I think that was like the first thing I was talking about when I was asked to speak earlier. And basically, if you study the cashless policy and its effect on fintech in Nigeria, you'll understand that fintech in Nigeria is where it is today because that policy foregrounded and paved way for a lot to be able to happen in that respect. Now, the policy came into effect, I think, around 2013 or 2014 specifically. And as I quoted previously, around that time, the bank's population of Nigeria was quite very little, not little, but it was in the multiples of around 50 million at the most. But when the policy was introduced, and over the years, that number has almost kind of tripled, because now we have a bank population of around 150 million or so in just the space of 7 to 10 years or thereabouts. Now, what this means is that fintech has been enabled by that policy. That policy was simply take cash from away from the economy, let people be encouraged to interact and do banking in a structured environment that does not involve the transaction of a cash-based transaction. Now, fintechs, we all know that fintechs operates using financial technology, usually through digital banking platform, lending platforms, crowdfunding platforms, and the like. Previously, in Nigeria, if you were going to get a loan from a bank, the usual thing to do was walk into a bank branch and then fill a form, a lengthy form, probably have a mini interview with a credit officer down there who will assess your creditworthiness, and a lot of that on paper. And it could take days, weeks, or months. And the other side of it was that the biggest players in that sector then were people, companies were already established, just the ones who, and then HNIs, high net worth individuals were the ones who could access large reserve of funds and then some significant amount of money. But thanks to fintech, because of that cashless policy now, a lot of people have to open bank accounts, get online, transact, and the use of ATMs became more popular than before, debit card and credit cards. And in essence, I like to say that for me, one of the most significant events that happened to Nigeria fintech is not only the financial crisis. The financial crisis goes back, but as recently as 2013, 2014, when that cashless policy came into effect, it allowed fintech to grow to what it is today. Fintech is continuing to advance just because of the strides that the cashless policy allowed it to take. Thank you.
Okay, thank you very much, Peter. So I can call Joel to ask his question again, and then after his question, we'll ask question 2 and 3, and then we'll be rounding up for today. But I still encourage anyone, if you have a question, please just raise your hand up and you'll be called. Thank you. So over to you, Joel. You can ask your question.
All right, thank you, ma'am. I wanted to also, I think one issue with regulatory authorities around the world is that they found it hard to classify what cryptocurrency is. Is it a security? Is it a commodity? And has led to some regulatory issues. For example, in the SEC versus Ripple case, where they sued Ripple because they did not register their securities before issuing it, and then Ripple is saying cryptocurrency is not a security. I know in Nigeria, SEC released a statement that cryptocurrency or digital assets are securities. So I wanted to ask, in your opinion, what would you classify cryptocurrency as, and how would that help regulatory efficiency because when it's a security, you have to register, you have to file prospectus, you have to do a lot of things, a lot of regulatory bottlenecks that might impede the development of cryptocurrency or digital assets in Nigeria. So I'm asking, what's your opinion?
Okay, so would like to hear from Kemi, and then would also hear from Mr. Peter. Over to you, Kemi.
Okay, so what would I classify it as? I think I would. So obviously, sorry, can you just say the question again? I think you asked are you asking what I classify virtual currency as, or cryptocurrency? Okay, so I would say that like it's a form of exchange, so like a unit of account, or like something that stores a value and allows you to transact with other people. So I see it as like a currency, but just obviously not regulated by a central authority. And to go deeper into what you said about whether I see it as a security or not, I guess I'm trying to think, would I see it as a security? I think that would depend on the context in which you are using the cryptocurrency. I'm not really like well-versed in the crypto space. I think it's like something I'm really interested in and I want to learn more about. So maybe you could even educate me more. But I think just looking at surface level, like the knowledge I have of it, I would see it more as an like asset, like, or a form of like a unit, like a stored value that you can transact with. I don't think I would call it a full-blown security. I don't know, it's kind of complex. Maybe like Peter can answer and then I'll think more about it and see, because I haven't ever really thought about that. So I don't have a definitive answer for you, but I'll let Peter talk and then I'll also think about him, or maybe once he's done, I'll like have something further. Yeah.
Thank you so much, Kemi. So over to you, Mr. Peter. Okay, so I don't know if we still have Peter with us.
Not with us anymore.
Okay, I think probably he might be having some network issues, but he will still join us back. So while we're waiting for him, I think that we would ask the person raising up his or her hand to also ask their question. Okay, na Oyelu. You can unmute yourself and ask your question.
Good day, everyone. I was on and off from this meeting because my network wasn't so good. So I was said, but I'll ask it anyways. How proper is it for loan apps or loan to post, or if all my contacts are informed or something, or they post? I recently wanted by the loan app to all their contacts, and I believe it's simply because the person had not repaid the loan as and when due. So how proper is that, and are there any regulations against that?
Okay, so I think this is an ongoing topic that NITDA is trying to handle. I went to a conference, I think it was like beginning of the year, where an official from NITDA was talking about how somebody on this call mentioned Soko loan. So NITDA has basically imposed penalties on companies that have breached personal data laws. So the Nigerian Data Protection Regulation is the main like regulation which governs data protection in Nigeria of personal data. So under the regulations, you should, if you haven't read it, you should. So under the regulations, there are different like qualifications for consent. So you have to have consented to your data being shared. If that's not the case, then they are breaching that right that you have under the law. And funny that you say this, because another thing you should read, there's an article, maybe I'll send the link here, but there's an article that came out in The Guardian UK, about basically how a lot of these loan companies had like breached people's personal data privacy, sent messages to their contacts, and there was even like a situation whereby people became suicidal because of the contents of those messages. I even received one yesterday from a former colleague of mine, and it was terrible. It was like, this person has defrauded the company. They put his BVN, they put his date of birth, which is in accordance with the laws. Like, there's certain procedures you need to follow to be able to share this sort of sensitive information. And the answer to your question is, I think it's despicable what these loan sharks do. Like, there is a reason why we have data privacy laws. Like, we're moving into a world where data has become an asset, like companies sell data, and there needs to be tighter regulation. And I think NITDA is trying to do that. I'm not sure that they're able to fully control everyone yet, but I think this is something that they should definitely double down on, because it has really negative consequences on people's livelihoods, people's reputation. So yeah, in answer to your question, I think it's like there are laws. So the NDPR 2019 deals with that. And I foresee that as this becomes a more prominent problem, NITDA will definitely, well, I would hope that they would get more regulations or impose greater fines to deter people from breaching these privacy laws. So that would be, I think that's, so I'll share the link to the article. I think everyone should read it. It's super, I mean, it's sad, but it's also interesting. Yeah, I hope that answers your question.
Thank you very much, Kemi, for that response. And it's good to see that Peter Cole is back. So we'll just ask him to touch on Drell's question, which was talking about blockchain in the fintech industry, and also touch on this question. If you have a question, please just lift your hand up and you would be given the opportunity to ask your question. Thank you. So over to you, Mr. Peter.
Yeah, all right. Thank you very much. Apologies. I think I had a network glitch. All right. So first off, the previous question about whether cryptocurrencies can be said to be digital assets or securities. I think that for me, it's not a question. It's something. It's a fact already, because we've seen it already playing out already previously. Exchanges and securities commissions all over the world never really regarded cryptocurrencies to be a significant store of value, or whether it could be a medium of exchange primarily. Some felt it was just more or less a commodity that was traded online. But over time, I think the shifts in that policy is already clear, because the US Securities Exchange Commission itself has now determined, it hasn't officially, I'm not sure it has officially regarded cryptocurrencies to be securities, but the shift policy-wise is in that direction. And you also make a very brilliant reference to the regulation on digital assets by the Nigerian SEC itself, which is a very welcome development. So without any doubt, I personally believe that cryptocurrencies are digital assets, and yes, it can be securities. It can be determined to be securities, because the simple equation to determine whether something is security or not is whether it can be traded officially on an exchange, and whether it can go through the process of a public offering. Currently, we've heard of ICOs instead of IPOs, which is usually what securities are done. So we now have an initial coin offering where the cryptocurrency is more or less presented to the public for sale and all that. So it's by all means an asset and a security. Now, to the second question, which Kemi touched on very well, I think the issue of the data privacy and data protection in Nigeria is something that we previously did not pay enough attention to. And that's why we had issues of many of these very oppressive loan companies sending unwarranted, unsolicited messages to people and breaching their privacies by messaging contacts and sending all kinds of messages. Just brilliantly refer to the role that the NITDA has been playing in that regard. They've clamped down on several. The NITDA, in conjunction with the FCCPC, the Federal Competition and Consumer Protection Commission, have also clamped down on various loan companies. You heard of the fine that was levied on, I think, Soko Loan and a couple of other of those very terrible loan companies. Because even if you're going to issue digital loans, which by far are more risky, we have to understand that, first of all, digital loans are sort of a more risky loan to give, especially when you're not a traditional bank who has unfettered access to the account of your customer. As risky as it is, you still have to do that within the ambit of the law. You should not go out of your way to attack people's privacy or reach out to their contacts without the permission. And that's so data privacy laws are already in place. It's mentioned that the Nigerian data protection regulation is in place, and that has to be enforced. I think for Nigeria, usually the problem is not the lack of laws. It's never that there are no laws. It's always a question of enforcement. How many of these deterrents have been brought to the book? And if they've been brought to the book, have they been sufficiently punished to serve as a very clear message to the order so that people know that we are serious about data protection and privacy in Nigeria? So a lot of positive steps have been taken in that respect, but more can definitely be done to be able to protect people's privacy and their data protection. Thank you.
All right. I'll just quickly step in very briefly. I had some network issues, so I had to be out of the app for a while. I think we have a question here saying, are companies like Uber, Bolt, and other ride-hailing apps categorized as fintech companies? So one of the mentees is actually asking this question, and if you don't mind, our mentors can respond to the question. Thank you. Kemi, would you like to respond to the question?
Okay,
then we can hear from Peter as well.
Yes, thanks for the question. So I personally wouldn't categorize Uber as a fintech. I think I would categorize it as a company, a digital platform that's offering service like logistical support services. Like the aspect of the fintech aspect of it would maybe be the use of like cards or like transfers on the app, but I wouldn't personally categorize it as a fintech. Like it's not one of the companies I think of when I think of a fintech. But I'd love to know why the question was asked though. Like, is there a reason behind that? Or is it just like, because it may help to know why you would like to know whether it's categorized as a fintech.
I had to relay the question. I think the question
no worries.
From one of the mentees, but I think the rationale behind the question might be the fact that those ride-hailing apps actually also receive payments and all that. So because Jumia is receiving payments, may not necessarily make Jumia, except that Jumia also has Jumia Pay. They have a specific payment app.
Exactly.
So if you are not using Jumia Pay and Jumia still receives your payment, does that make Jumia a fintech company?
Interesting. I think for me, obviously there's no one definition, but for me, I would say like a fintech is a company that's providing like democratizing financial services, so making it accessible to people all over the world and providing like solutions for payments. And yeah, I think like there's this debate about like how there's this pyramid of fintech. So in Nigeria, we're very like bottom heavy. So you have payments, then you have like, as you go up, you have investments. So as it gets more sophisticated, so after investments, then you have insurance, and then insurance and investments are like higher in the pyramid. I think it's a pyramid like structure that is, if you look online, you can find it, but it just talks about how like as people grow in their like finances and earn more money, they start to get more, they start to have like more sophisticated needs and interests. So if you look at like Monzo or like Kuda is trying to be like a one-stop shop for your life. So like we have payments now, but the idea is that each app will want to have all the services on one thing. So if you want to invest, you can be there. If you want insurance, you can have it. So yeah, I think fintechs, I think I've waffled or maybe digressed, but I think the long and short is I think fintechs are basically companies that democratize financial services. Yeah, that would be it for me.
Yeah, I wouldn't know if Peter has a response. Is Mr. Peter online?
Yeah, yes, please. Yeah, thank you very much. Yeah, It's a very interesting question, actually, because as we try to point out the rationale behind the question, we often say that fintech, financial technology platforms are basically digital companies or digital establishments that more or less make use of the financial technology to simplify payments solutions generally. They offer a form of financial services online. So if that's the definition of what a fintech is, and Jumia allows you to make payments on their platform, and the likes of other alien apps that we know, Uber as well, allow you to make payments on their platforms. Can we categorize them rightly to be fintech? I think the answer is neither here nor there for me, because it's a question of, if we go back to the definition and insist that any platform that uses technology to integrate or enable finance one way or the other is a fintech, then we can then say it is a fintech. But I feel that it goes beyond that. It goes beyond just having a back-end platform that just allows you to make payments. To be called a proper fintech company in the real sense of it, you have to be doing more than just that. You have to have a structure in place that enables and more or less permits customers to transact, and that is the primary business you do. It is not a secondary business, because for many of these alien apps that we mentioned, the question of the fintech platforms they have are not their primary mode of revenue. They're just a technology that enables what they do primarily to go through. So it's a question. So I think the question is always, what is the primary source of revenue for you? What is your primary revenue model? If it is the fintech, then you can be properly and rightly classified as a fintech company. But if the fintech platform you have, or that fintech technology you are using only enables the first thing you do, then more or less, for me, you're not you can be a prop tech, you can be an insure tech, you can be anything else but a fintech. But you can still be applying the technology that enables financial services to work optimally, but you're just not a fintech company. Thank you.
All right, thank you so very much. I think it's actually clear, because we might want to make the mistake of thinking that any platform that takes money, maybe through any of these mediums, is actually a fintech company. So I think that actually clears the air. Then I think someone also asked the question around expansion fintech. Is blockchain a form of fintech? Is fintech a form of blockchain? So I don't know if any of the mentors have anything to say around this. I know a little. I don't even want to say I know so much about blockchain, because the little research I did on it, I had to just pause a bit and focus on other areas of concern. So I wouldn't know if any of the mentors can actually respond to that as well.
All right, Kemi's going first all this while. So with your permission, let me just go first.
Okay, so the thing is, like, let me just put this out there. I feel like I'm guilty of this as well. Everything technology people see as fintech, but I wouldn't. So I guess we're looking at what is the main category? Is it fintech or blockchain? I would say blockchain is just a type of technology that is used to facilitate like the currency. So for example, like how you have Ethereum, there's like distributed ledger technology that like powers that. So I wouldn't say blockchain. I may be wrong, please correct me, Peter, but I wouldn't say that blockchain is fintech. I think it's very confusing for everyone, because like, I think last week I was talking about this company called Helium Health, and I was like, oh, fintech. And then my friend was like, it's not a fintech, it's a health tech company. So I'm like, okay. So basically it's very easy. Like, I can't lie, if you see a company that's raised money and it's a technology company with young people, everyone's like fintech. But I think you just need to understand that like, the fin is the most important part. So if you see that, like Peter rightly said, like if the first line of business is finance and they're using technology to solve a problem to do with finance, it's likely they're a fintech. If they're using technology to solve a health problem, they're probably a health tech. You get my point. So in answer to your question, blockchain is not, it's a type of technology. It's not fintech. I hope that helps. Yeah.
All right, then. Mr. Peter, you can go for it now.
Yeah. That was well said by Kemi, actually. No, I think that the usual challenges we have with lumping blockchain and fintech together is that we often do not realize that before we talk about blockchain, fintech sort of predates blockchain. Financial technology in its evolution over the years has existed in various forms prior before anything called blockchain was ever discovered or came into the fore. So it would then be wrong to say that fintech is a form of blockchain if fintech predates blockchain. Right. And if that is a fact, I'll go back to what we define fintech to mean, which is more or less the integration of technology to enable finance to work well. So what we're simply saying, there's a platform that employs the use of technology, right, to be able to make finance seamless and to work effortlessly. And then, like Kevin pointed out, the key element is always, what are you doing precisely? Are you a finance platform using technology to enable finance work well, or you are a health tech platform using finance to be able to enable what you're doing? So primarily, in terms of blockchain exists in various forms. Blockchain is used for different form of things. It's not only finance. We've had advancements in blockchain to be able to enable health tech work well. We've had insurtech platforms now that use that operate on blockchain technology, right? So we can call those ones fintechs also, right? So it would be wrong to either lump one together or say that blockchain is fintech or fintech is blockchain. But blockchain enables fintech, and fintech operates outside of blockchain. I think that's just the way to put it, more or less. For my own.
All right then. Something just. Thank you so much, Peter. Something came to mind. I had cause to deal with a certain should I call it a fintech company, and they've kind of been within this whole regulatory loop, waiting for the license over a very long period of time. So having witnessed that firsthand, I can actually say that it's quite difficult to legally enter into the fintech space. We underestimate some of the regulatory hurdles that, in fact, I was reading something that CBN was actually saying, maybe they want to increase certain share capital base to like 2 billion shares and all that. Like, how many young people that are trying to disrupt the status quo, will be able to go through all of that hurdle? So I wouldn't know. I haven't personally completed, the entire value chain for getting a license for a fintech company before. I would want to know if you have, if you know people who have, and if you can just share with us an experience and all of that.
Yeah. Thank you very much. Yeah, that's a very fundamental question when it comes to the issue of getting the regulatory permits and licenses for operating as a fintech in Nigeria. As you mentioned, these are realities. These are realities in the sector. To get a license, to get an official permit to operate as a fintech. Don't forget, first and foremost, that the primary regulator of the fintech industry in Nigeria is still the Central Bank of Nigeria. And the Central Bank of Nigeria, being the big player that it is used to playing with the big boys, in quotes, in that sector, in the finance sector. And those are we're talking of the commercial banks, the Fincoms and the likes. Those are the people that CBN is used to interacting with. Now, because of the advancement in technology and fintech companies emerging, CBN has had to come up with regulations of different forms. In fact, as we speak now, there are over 20 to 30 different regulations on getting access to of fintech licenses in Nigeria. It's not a question of what precisely do you want to do. I often advise startups that do not look at getting the biggest in quotes or the prices of licenses. You can break things down. There's no point if you're just starting and you haven't raised $1 million in funding to want to get a payment service bank license, for instance, the PSB license. I think right now there are just a few, around 5 to 7 companies who have gotten the PSB license, and about 4 of them are telecommunication companies, and 1 or 2 of the others are commercial banks, because the funding, the capital requirement, which you refer to, are strenuous. They are hard to come up with if you are not a big player in the industry or you are not backed with capital, and you don't have an endless pool of reserve to go from. And these are the challenges that we are faced with on a daily basis, and we also bring to the attention of regulators. Recently, I attended a program where the SEC, the CBN, and I think the FCPC were also in attendance, and it was a question of debating and just talking around problems with making it accessible for small players like fintech companies to come in and have a seat at the table. That's why it was hard for many of the fintech companies that we know to even get a license in the first place. I think Koda only got the fintech license from CBN about 2 or 3 years back. 3 years, if I'm precise. And they had been in operation far beyond that. Now, but there's this arrangement that CBN gives where you can be exempted for a number of years to be able to build your innovation and then just get started. Yes, and you're in your pilot phase, but you are not fully licensed yet, but you can continue to more or less do business for that period of time before you're now being asked to come and make the regular, the necessary payment to get the license. So I think that's an exemption that fintech companies can take advantage of. But the first thing to do is just to ensure that the regulators are aware that you're doing business and you have the permission to carry on within that period of time and enjoy the exemption before you become profitable. We saw that play out in the telecommunication industry in Nigeria. For instance, MTN, we all know the story of MTN, how long MTN existed before MTN started to pay the taxes they had to pay to the federal government of Nigeria. So fintech companies can also take advantage of that and ensure that the CBN is aware of the activities and the other regulators as well. But you cannot put a time frame to getting licensed particularly so that they don't have to go out of their way to get a license. And then eventually, if the business fails at some point, which it might, which I pray it doesn't, then they would have lost a huge number of capital to regulators for getting a license that was actually not useful. So these are realities present, but regulators have to do more to ensure that the enabling environment is created so that access is given to fintechs and smaller companies on the market. We have the same issue with the capital market industry in Nigeria. It's hard for you to get capital from the capital markets if you're not a big player. It's hard to come there and raise a certain level of capital. But recently, more regulations have been made to be able to encourage small players to come in and also have a bite at the large cake and also be able to play there. So we just hope that more and more can be done to encourage that and enable fintech companies to be able to get access and get licensed to offer. Thank you very much.
All right, thank you so much. Well, I think while we'll be expecting just a brief feedback from our second mentor, we can begin to prepare for our picture time. We'll need to take pictures. So everyone, I encourage you to put on your video. Let's see your beautiful and handsome faces. You know, we normally post these videos on LinkedIn, so you want to be sure that like you're giving your best representation so that when you start trending with like 1,000 views and all that, you know, it will be worth the while for people to see you very well. So please, I would encourage us. Let's see how we can. Let's see. I can still see several of us haven't turned on our videos yet. Please, if you don't mind, kindly turn on your videos, please. We have more than 80% non-compliance. Mr. Tega, you can also change your name, Chimezie, Lope, Deborah, Grace, Eze, Bukola. Yeah, please, let's see how we can get our videos on. So in the next 20 seconds, Mr. Hussein would help us with a screen grab or a screenshot of the pictures. Are we ready? Okay, I can see more of us are on right now. Thank you so very much. So we would take the pictures right away. So I guess we have it. We have the pictures already. So thank you so very much. So I wanted our second mentor to just give us a final recap on the last question before we call it a. Is she?
So I went off for a bit. So I'm not quite sure what the question you're referring to is.
Okay, we were just talking about, have you had any direct experience in terms of the time frame that it takes to get a fintech license in Nigeria? Because yeah.
Okay, that's really interesting. Okay, so I mean, there's not one. Okay, so I'll speak to the licenses I've like worked on directly, but it's super interesting because when I first started working in the fintech space, like specifically as a lawyer, the license that was most popular for a lot of these payment companies is the MFP license. So, for example, Kuda actually has an MFP license. So what they do is they either acquire a license, so you can either acquire a license and then you get CBN approval of that acquisition, or you can apply directly. So before like this,
it appears we're having some technical hitch. I don't know if it's so for everyone.
It's caught on, and people found out that people were applying. And what the CBN realized is that, okay, there's not really much scrutiny over them, because we're not even saying that like certain banks, like if you are... Hello?
Yeah, I can hear you.
Hello?
I can hear you now.
Yes,
I can hear you.
sorry. You know.
Okay, I think I was having... So I don't know where you last, like... One second. Switch to my laptop. So last you heard, but essentially the CBN is now clamping down, and what we're finding is that like certain banks who already have licenses, so for example, if you're registered for like as a merchant bank or something, and you try and apply through another company, like just a limited liability, like a legal vehicle, they will tell you that they feel like they can tell you that they will not approve you for this tier of a license. So they have tier 1 and tier 2. So you have the state's microfinance bank, you have the national microfinance bank. So they'll tell you that you should do the highest one, which is like 5 billion capital requirement, which is absolutely ridiculous. So I think with licensing, what we're finding is that like the CBN is realizing that like this, if there's a low barrier to entry, they want to make it harder because they're trying to quote unquote protect the economy, protect investors, which I think to a certain extent is true. But I think there needs to be a balance between innovation and also protection of the consumers. So I can also speak to SEC, because most people don't realize that like SEC is also a primary regulator, because for companies who have like digital brokerage platforms, or for companies who have like savings products. So for example, PiggyVest, for example, now they have like this savings product. So in order to facilitate those products, you require like a fund manager's license. Or if you don't have a fund manager's license, you need like a partnership with somebody who's licensed. So I think, to finalize what I'm saying, like the licensing space is really, really complex, especially because you find a lot of fintechs wanting to like find loopholes. So if the application is going to take 3 years, why can't I just partner with someone? So a lot of fintechs do partner with other licensed entities, but even then, certain times the regulator will come and tell you that, okay, we need to see the service level agreement that you guys have to ensure that we agree with the terms, you're not breaking any of our regulations. But I would say CBN is way more compliant than SEC. SEC is really hard to deal with. CBN is like super easy, like way more responsive. But yeah, I hope I answered the question. I could go on for days because this is something I've done a lot of, but I'll just keep it short. Yeah, I'll keep it short.
Yeah, well, I'm very happy that you can actually go on for days in terms of what fintech actually offers. So maybe what I'm thinking is we might hit you up on another week for the mentorship if you're still interested to share more of your thoughts. And we want to appreciate all the mentees, appreciate our mentors as well. We're saying thank you so very much for a very great job. Our convener, Juliana Imam, thank you so very much for the opportunity to moderate this fintech session. I have actually learned so much. I've learned a lot, both from the presenters, from group 1 to 4. We have 8 weeks more to go. I'm very excited because I'm sure that you have the stamina to pull through. Today's attendance was above 80%, 85, almost 90% plus, which is a very good one. I hope to see that all of us keep to the remaining 8 weeks involved in this program. And one guarantee that I can actually give to you is that at the end of week 9, once this program is over, you will discover that you're actually in a better place in terms of your knowledge of fintech and all the areas that we'll be touching on in the coming weeks. Thank you for all the presentations. They were actually well researched and well thought out. I wouldn't know, Juliana, do you have a final word just to wrap this up?
Okay, thank you very much, Mr. Joseph, for moderating this session. Thank you to our able mentors, Kemi and Peter. We really enjoyed listening to you, and you have simplified the fintech industry for us. And we would like to say a very big thank you for heeding to our call and for giving yourself to mentoring the next generation. We also want to say a very big thank you to all the mentees who came together to research and to present. You did beautifully well, and we hope that you continue with this enthusiasm and even better going forward. And to all the admins, those at the back end, thank you, Hussein. Thank you, Mr. Joseph. Thank you, everyone. Have an amazing weekend. Week. Some of us, it's like we're waiting for the week to be over. So thank you so much, everyone. Have an amazing day. Take care of yourselves all. Bye.
Bye. Thank you so much, everyone. Bye.
Thank you, Kemi. Thank
Bye,
you, Peter.
everybody.
Bye.
Bye.
Yeah, thank you very much.
Share on LinkedIn. Don't forget to share on LinkedIn and tag your mentors so that they can see the impact of their discussion with you today.